Hey traders, Raghee here, and in this free recap video we're going to cover how I trade the open, and today was a really good example, and I want to show you a couple tools that we use. These are free tools that we use in the members area, but you don't need the tools. Tools are about convenience and confirmation, but I just want to show you how this works because it really highlights the trade really well, and you could put this trade to work tomorrow if you'd like. Okay, so this is one layout that I use to trade what I call the clearing range trade. It's really basic. It's something I used to do in the cocoa market. It really works in any market where there's an opening type psychology. You know, increasingly we're seeing more markets have more of a 24-hour trading. You know, this isn't the way when the pits dominated that we have this sort of real trading hours and then everything was closed and we'd have the rush when the bell rang, and so we don't have that bell ring rush anymore in many markets, but it still exists in equity index futures and in stocks and a handful of other markets, but it's, I think, most intense there. So that's number one. What environment did this work in? It's that bell ring rush. Okay, so I look at the four main index futures for this 9:30 bell ring rush. The clearing range is the first 30 minutes of the morning after the bell. And it's just like it sounds. It's all the trades being cleared. All these orders hit the market all at once. Lots of volume, lots of participation, lots of execution, but not necessarily reflecting where the morning is going to go. This is really a morning trade. 9:30 the bell rings, 10 o'clock it's the end of the clearing, and then I look for some clarity for about the next 60 minutes to about 11, maybe 11:30. And that's about it. So this is the time frame of it. This is very much part of the day trading life for me. It's a trade that I look for every morning. So we do this so repetitively, you know, and one of the things I love about our members is that we have a lot of industrious members and very generous members. And one of our members created let me go over here, it's on Thinkorswim, and they created what's known as the CR trade. And it's a trade flag. That's what I call these little flags. I'm an avid fisherman, surfer, diver, beach diving, beach fishing, and you know, you'll see the lifeguards put the flags, letting you know about riptides and certain conditions. Man of war is a big thing down here in Florida. So all those warnings. Well, this is kind of like that. It's a flag, right? Lets you know what's going on. So the bell rings, and what this tool does is it marks the high and low during the clearing. That's this orange area. So as the range is set between 9 and 9:30, this thing automatically marks it. And then once that range is breached, after 10 a.m., after the clearing is over, you get a trigger. So, of course, you don't need this automated, but it sure is nice. Like I said, convenience and confirmation. So what we're looking at here is a breakdown. Now, what I want to do is show you that we could do this on a number of markets. I just happen to have this on TLT right now, but we did this on the S&P this morning, the NQ, a number of the index futures. So there's your range, there's your breakdown. That's the S&P. And again, you can mark this manually. Don't think you need this tool. It just simplifies the view. Now let's talk about why this broke down this way. And by the way, gang, what do you need to do this on your own? All you need to do is just mark the high and low of the first 30 minutes of the day and wait to see what happens after 10. Which way do we break? Now here's one thing also. There is such a thing as a range too wide, right? So I use what's known as an hourly price movement range, which is a volatility measurement that I use to make sure that that range is not too wide, because then oftentimes what you'll end up with is exhaustion when you're actually looking for the momentum. Today it was really interesting. A lot of times it's amazing how often news will be a catalyst, but price actions also clued you in. We broke down and accelerated to the downside, likely because the Lighthizer U.S.-China trade negotiation news, which was negative, came out, sent the market lower. At 10 o'clock, it was day 2 of the Humphrey Hawkins testimony with head Fed Chair Powell talking about possibly keeping a larger balance sheet. Loretta Meester had alluded to this. This was something the market's been looking at, and I think is playing out in the XLF right now. But the market's preparing for the Fed to not only pause, and don't expect cuts anytime soon, but they're going to pause, and instead of cutting, I think what they're going to do is keep a larger balance sheet and reinvest. So they're going to keep a larger balance sheet rather than letting the roll-off continue. And the market like that because that's about adding liquidity. Globally, the markets are going to like that. Certainly, stocks are going to like that. It's like a cut, right? It really is like a cut. So that's what we saw the rest of the trading day. And just to kind of bring this all home, the last thing that we did before the close was actually we got long in the last hour of the day. It was a little lumpy and bumpy, but we got long in the last hour of the day and ended up taking a nice little ride to the upside, to a very small but nice little ride to the upside the last hour of the day. But the big trade was the first. I love those opening clearing range trades. I've laid it out here for you. Just kind of, it's nice to show you via this automated tool. This is free to members. This is something actually a member created, right? How cool is that? One of our members created it. I always make sure I let you all know why and how, the transparency of the trade, and that's how that works. So check that out tomorrow. Let me know what you think. Leave some comments on the video, and I'll see you in the next update.